Hey, good morning, Sal. We're here with another episode of the High Ground powered by Premier Companies. We have Aaron Bledsoe with us again. Another opportunity for you to regale us with your knowledge of the USDA report. So I can't imagine there's any volatility or any news you have.
No, none at all.
You know, there's waiting for the USDA report, and then there's the waiting for Aaron's take on the USDA report, and those are two different things.
I hope they're not waiting too long for my take. There's very few things I know in this world.
I think I will tell you that to show my own ignorance, I had no idea Ukraine was such the breadbasket that it is. That's something that I have learned through this, and I'm probably playing my hand on not being very smart, but I was shocked at how prolific they are in grain production. So.
Yeah,
and fertilizer exports.
Yeah, and fertilizer exports.
Mm-hmm. Yep.
Okay. Well, Aaron, we'll just let you jump in.
All right. Well, to start, we can go over the numbers really, and then we can get into a lot of other topics. But as far as the report goes, it was a bullish report. They initially put a note at the very top of the report saying, there's with the war in Ukraine, this is just trying to reflect the short-term implications. So they're already putting it out there saying, we don't know what's really going to happen out of this. So no one was surprised by them making small adjustments to global stocks and things like that. Now, here in the U.S., what they did do, for corn, they popped up ethanol usage by 25 million bushels, and they increased exports by 75. So total, our ending stocks went down to 1.4 billion bushels, which is good for prices. Initially, you had the corn fall on Wednesday right after the report, which some of that could have just been selling off. But there was also a report that Zelensky was willing to have diplomatic talks again, and obviously that fell through. So that put a little pressure on the market just from him saying that.
I heard that. Never saw that headline one time. I heard one person report that at the grower meeting. Never saw it.
That was the same thing here, and we was all like, "That's a good thing," and then it never came across any headlines. And that must have been the most quietest, but I guess some people heard it.
Yeah, and it blew me away because I was like, wait a minute, we just dropped ending stocks 100 million bushels, and we're down 20. I mean, I know there's profit taking, getting out of the market a little bit, drawing it back, getting back into it the next day, but that seemed a little excessive. And then I finally saw that headline, like you guys said, it was really quiet. And it was, I didn't find it till about 9 o'clock that night, and I was like, oh, well, that would drop at 20 cents if you're saying that they're going to start talking and open that stuff back up.
Yeah, there's a moment of hope there.
Yeah, yep. As far as corn, last time I was on here, we looked at prices, what they were this time last year versus what they are now. I think that's pretty beneficial into figuring out where this thing could go, or where at least get a perspective of where we're at. So last time I was on here, the Dees 22 was trading at 590. We're right around the 650 mark now. So another 60 cents, which goes towards that volatility. 60 cents that's a decent push really for corn. I mean, when you're talking big days of 20 to 30 cents overall in just a month, 60-cent gain, that's good. Globally for the reports, like I said, there's really no significant changes to the global stocks. It was kind of weird when they looked at Ukraine and Russia. They actually popped up Russia production, but it was minute. But they still did it, and I have yet to figure that one out. I don't know if they're expecting them to take part of Ukraine and then absorb that into their production or what. But the Ukraine production went down just fractionally. And again, that's something that we don't really know what the implications are right now.
Yeah, in perspective, I think we're getting a podcast in the pipe here to get out hopefully next week, and we talked about, I mean, if it was a war here, I mean, how would we farm? Mm-hmm. How could we farm?
Yeah.
And, we'd all be just definitely engaged in that. And there's a lot of things coming here to your first point that we just don't know.
Exactly. Yep. And overall, the report for corn was very conservative. As far as an overall picture too, Ukraine plants in March, April. So that's a whole different topic. But right now, that's kind of why I feel like they didn't make much of an adjustment there because they just don't know. But overall, for the U.S. crop, we went down to 1.4 billion bushel carryout. So it's trending in the right way for prices to continue going up. Now, the implications of it going up, that's a whole different story. But that's where the numbers are on the USDA report for right now. Beans came in below 300 ending stocks, so they're at 285, and they got that by increasing exports by 40 million bushels. So that dropped the ending stocks 40 million bushels. That was the only change in that. There are some people out there that think that they could increase the crush number, which will draw that ending stock number even down further. Anytime you get below 300 million bushels, we really start talking tight stocks, especially with South America crop shrinking by the minute. That's been something that after the first of the year, I did one podcast where I thought the export number would need to be trimmed for us. Well, the South America crop kept getting smaller.
And what's going on down there for this is and we're in the room here on March 11th, 2022. So what's current events in South America for the listeners?
Yeah, so currently the bean crop is getting smaller because during the main pod setting time, they were really dry. And it really hurt quality, really hurt production, and they keep trimming that number. You start talking about the CONAB numbers down there. They're still smaller than the USDA number. USDA did drop it a little quicker than what most of the estimates thought. So we had a nice little bump in beans. Today, which is Friday, right after the report on Wednesday, they're down a little bit, but I wouldn't be too worried about it.
Okay.
This time last year, the NOV 22 was sitting in this time last month, in February of, just a month ago, the November was trading in the 14, right around the 1450. I mean, we were bumping between 1430s to 1460s. Right now we're around that 1490 mark. So there's a nice little bump. Not as big of a bump as what you would expect for all the volatility. I mean, if you would have watched this market over the last month, you would have thought we gained $1 or something, and we've gained 40 cents. But the morning of the 24th when Russia invaded Ukraine, that was a day for targets to work.
Wow.
Because we could have locked in $15-something beans for fall delivery, but you had about a 2-hour window there for that to happen. So unless you woke up in the middle of the night to see it when it happened, you would have missed it.
If there's a lot, I've learned a lot of things from you, Aaron, but those targets have got to be the most obvious ones.
Yeah.
Is to put those in, and even if it's what seems like a Hail Mary, just stick it in there.
Yep.
And let it sit, and then 1 and 2 o'clock in the morning, bam.
That is exactly right.
Wow.
Yep. Globally, they dropped the Brazil crop 7 million metric tons down to 127, which that caught the trade off guard a little bit. Everyone felt like they needed to trim it, but for the USDA to make a 7 million metric ton drop, that's a pretty significant number. Argentina, they dropped at 1.5 million metric tons down to 43.5. So both of those are obviously significantly lower than last year, which is leading into global stocks for beans tighter than what they're used to.
Tighter stocks for beans in a world that's uncertain about what next month looks like.
Yeah. Yep. Overall, tighter stocks on corn and beans. We're definitely tight on beans. It's uncomfortably tight, I would say, for beans. Corn, if you didn't have the Russia-Ukraine thing going on right now, corn would be a different story. It's not uncomfortable, but we're kind of okay. We're floating around in that range where we don't have too much, but we don't have. We're not worried about it.
Okay.
Which that leads into a bunch of different areas that we can go, and I'll leave that up to you guys. I've got some break-even analysis stuff to figure out cost per acre and what we're really looking at. Some of it actually surprised me, but I think it's a matter of perspective too, of some of these prices and yields, and with input costs and your cost per acre going up, it's really a matter of, did you think you were going to lose money? If you thought you were going to lose money, there's hope here. There's still money on the table to be made with these fall prices, even if they don't go up anymore.
Yeah, and it's certainly we look at in our minds, right? If you're the type of person and that goes, let's say a casino, if you're the type of person that comes in a casino, and I don't even know if they have $5 tables anymore, right? But if that was where you would gravitate to, but you would still bet maybe $10, but you just felt more comfortable if the buy-in or something was at a lower level. And so to take this back to corn, we rattled through a couple numbers here in a series of grower meetings we just had, and let's just, for rough numbers, for input cost, let's just say, and we're going to round to hundreds on this. So let's just say dry fertilizer is $200, nitrogen is $200, seeds $100, machinery cost $100, good insurance is somewhat less than $100, and then your cash rent on top of that, and your input cost as far as what your outlay is we're floating around $1,000 an acre to put out corn. And you did a cost analysis, and that puts our break even at about, what did you say, Aaron?
About 160.
About 160.
About 160.
So coming off a couple of really good years with corn yields, that doesn't feel bad. However, it does feel bad when you have this cash outlay when you're going into it. But and I'm not a gambler. I would be a bad poker player because I'm an open communicator. But but when you got a cash outlay like that, I mean, you're all in.
Mm-hmm.
This is a high stakes game.
Yeah,
It is.
It-
Yep.
And you think about it from just jumping in and playing to the credit side, the secured financing. As we're not. We're talking about the net not being much more than it probably was in any year, but the entry fee is high.
Yep. High risk, high reward here.
I think that's a good way to put it. Is that it feels like we got this much cash out, and but there is a whole lot of upside to this crop that we're getting ready to put in the ground.
Yep. Yeah. So if you look at that $1,000 per acre cost, I think our growers in our trade area they do a phenomenal job. Now, some ground's tougher than others, but let's just say that you can come away with a 175 average. At $1,000, you're looking at $94 per acre on corn.
Yep. And these are high rates. A lot of the growers, we have locked in some lower costs that what we're talking about there. So we've locked in we've tried to do that to mitigate some risk, and that's some pretty. It's phenomenal what the corn yields have been. So when we say 175, we've got some goat pastures that have yielded 200.
Yeah.
And
I think marginal ground's the actual term for that.
Not goat pastures. Okay.
I think people would rather you call those marginal. Marginal. Just me.
So on our marginal goat pasture ground.
You're right.
That's another term, though, right?
There you
That's
go.
even
Right,
worse than goat
exactly.
pasture ground.
That's the ones that's not even that good.
Okay. Well, here to get to your point though, I
To
think
the goat pastures?
Well, yeah, the goat pastures. So because the goat pastures you don't put as much inputs onto because they're goat pastures. You don't really care about them. Marginal acres, you don't spend as much time on them. So let's just say you drop that cost per acre down $50, down to $950, and let's say that we have, like you said, a marginal yield for around here of 175.
Yeah.
It's $144 an acre. I'm not telling people to short their fertilizer by any stretch of the imagination. That is not always the answer at all. But like you said, if you were able to buy into this a little earlier on the input side, or if your insurance is a little cheaper, or your machinery is a little older and a little cheaper on your front, there's ways that this comes out looking better than what I initially thought. Before I ran these numbers, I was like, ugh, beans all the way. Forget corn. I can't do it because the entry cost is way too high. But when you actually run the numbers, it's not as horrible as what you might think.
Well, and a lot of times our technology and our practices have increased, have outpaced the cost increases because we just, in that series of grower meetings, we talked about, the planting practices, the things we get right up front. And the planter technology is better. We can plant picket fences out there as far as, the equipment that we're using. And then we've got variable rate applications of fertilizer where we're not over applying. And then we spend a lot of time talking about stabilizing nitrogen this week. And so I think we're, from a practice and technology standpoint, we're in a whole lot better spot to deal with this type of marginal ground and making sure that we have good paybacks on this. And there's new risk tools. We're launching a new set of risk mitigation tools called the Impact RX series that helps you get some application assurance that we have if we know if corn hybrids got a high response to fungicides, we've got an assurance package with that. So we got some tools.
Yeah. I think that's what makes this so much better than what I initially thought, was the fact that we have the tools on your side, Sal, with the agronomy, and then we have the tools on the grain elevator side where we can give you some of these really good prices at this point. Bean, that picture, I initially thought beans looked great, and then I ran the numbers, and I kind of like beans even more. But we all know we're going to plant as much corn as we possibly can. The U.S. likes to plant corn, period. We like corn. It looks good. It's yellow gold. We're going to plant it. On the bean front, if we threw like a $650 per acre number out there with a 55 bushel average, you're making $148 an acre.
Yeah, it's pretty easy to like beans at that.
Yeah, it's really easy to like beans.
But, if these numbers were tighter and you said, I need 200 bushel corn or I need 60 bushel beans to make that, I think in Southwest Indiana, we've always felt more comfortable that we get 200 bushel corn long before we can average 60 bushel on beans. And so that has, there's that comfort factor in the back of our minds too, that we can always push corn yields. It seems like a little better than we can beans. That's probably changing. As we change our planting dates and as we change our management practices over the top and multiple plant health passes and those kind of things, seed treatments and all that, just continue to add to that. We used to, it's not been very long ago where we had the practice of fertilizing for 2 years behind corn and letting beans run on their own. So as they become more highly managed, that number does seem like it's pretty appealing too. So.
Yeah. And the stepchild we never talk about anymore is wheat. And wheat's a kind of a cover crop for us in the eastern corn belt. But if we're far enough south, we can get 50 bushel beans on a double crop, double cropping after wheat. And I'm not sure exactly how many growers are going to try to look into that opportunity for 23.
Yeah, I'll be curious. I'll be curious as how many cover crop wheat acres turn into a wheat field. This year, I don't know.
Glyphosate's tight anyway. Might as well throw urea on it.
Yeah, that comment drew a couple blank stares around the table here. Oh boy.
Yeah, I don't know. Maybe it's not that bad.
That is no means a recommendation for any of that. That is not coming back on me.
You don't have a high ground.
Are you buying wheat?
No.
There you go. No. See, there's the other side of the story.
No. Yeah. Here's the big asterisk. I don't know enough about the wheat market to give any opinions on the wheat market. What I do know is God's good. I married way above my league when I married my wife, and this Russia-Ukraine thing really throws a wrench in all of this.
Yeah. Those are all three facts.
Yeah, they are all facts.
Yep.
That's kind of where this overarching theme is, and everyone's got to be kind of tired of hearing all this. I mean, there's so much noise in the market right now. It's hard to make a decision on anything. And that's, if we just look at the USDA number, it feels good. I mean, it feels good. Even though, like, we just spent the last 5 minutes talking about how the entry to play the game is a lot higher, this feels good. When you run the numbers, it feels okay. Now, I'm not the one throwing out that $1,000 per acre cost. So this is a very emotional time. Emotions are even running high in the grain industry. And there are some watch outs right now. The grain industry as a whole, in these volatile markets, what we're seeing is places jump to deferred months a lot quicker than they're used to. Technically, we still have a month and a half where we could be trading the May futures, and a lot of places have jumped to the July. So one of the watch outs is for those of you that like basis contracts or like to lock in a basis and let the futures run. When you start calling around and asking for a basis contract, be very, very careful and make sure you know which futures month that basis is set against. Because you can call one place and they'll give you a 15 under, and you get off the phone and you call another place and they're going to give you a 45 under. Well, that 45 under was probably against the May, and that 15 under was probably against the July. And that relationship between the May and July is always changing. I mean, just a week ago we were at 45 cent difference between May and July. Right now we're looking at, for corn, about 22 cents. So, and when you're price checking people, make sure that you're asking the price, not the basis, because you can't go off of that right now. There's too many variables playing in this market right now. So that was one big thing that I really wanted to talk to our growers about, and just throw that out there. It's just make sure that you are actually getting every piece of it before you start trying to compare apples to apples, because in this in this environment right now, you can be trying to compare an apple to a potato. I mean, it's not even in the same. It's not fruit to a fruit anymore, and there's a lot of that is due to the volatility. And there's been reports that you're going to see some places, and I personally, as Premier, I know Jason and I, we're not there yet by any stretch of the imagination, but there are reports out there that the industry is going to jump to the D's and the no futures a lot quicker than they're used to. So by late spring, we might see where we jump from the D's jump from like the July futures for corn all the way to the D's. We'll just blow right past the SEP, and right now that would mean just on the future market about $1.05 loss right then and there. Now, basis values could be strong. So again, just be very cautious on what's going on right now.
When will we have more insight into that? When will we have a better after it happens?
Yeah, I mean that's sadly that's how fast things are changing right now.
Yeah.
The industry will be led by your export markets and your end user markets. And it's not any fault of their own. I mean, at the end of the day, this is all about risk management. And if places get their fill and they get their needs covered, at some point they're going to say this is way too risky for us. And as the grain industry, that's a good thing that we're trying to manage risk. It's not always a fun environment to try to work in or try to sell in, but at some point we also have to protect, the entire industry has to protect itself so that we can keep moving, because if not, it'll just be a bloodbath. And that's not good for anybody, from the bottom of the supply chain to the very top. It's not good.
So there's not a lot of grain moving locally right now anyway, right? I mean, you're dealing with your supply issues, not necessarily supply issues, but I mean, it's tight.
Yeah.
I mean, it's backing up now.
Yeah.
So there's no incentive to carry grain.
Yeah.
And there's not very many places to take it.
Yeah.
So our influences local clearly are, I mean, you got some end producers who are struggling with the avian influenza. That's a problem.
Yeah.
And there's no barges on the river currently, and the ones that are got pretty expensive pretty quickly last week as well. So you can expound on that. I mean, it seems like you should sell it.
Yeah.
If there were just a place to sell it.
Yeah. If you find somewhere, again, we're talking old crop, and this is this old crop is something that we're making money on. So what I don't want to see is a grower hold on to it any longer than they have to, and all of a sudden we make that big roll. And again, this is a potential. This is just rumors and reports, and the industry as a whole kind of throwing it around. I don't want to see our customers lose that dollar just on the future side of it, because they just held out. Now, if you find a place to deliver, because the river market's rough right now. Barge freight went up significantly. I'm seeing reports from 80. I mean, I don't want to throw ADM under the bus. Everybody's facing it. But since that is a market for me, I get updates from them saying they can't get barges. And that's not their fault. That's just that they just can't. Mm-hmm. So then you're looking at all your crushers. And when you can't deliver to the export market, you start hitting your crushers really hard. Well, you just pushed all of what could go to one place. You're trying to shove it into another, which was already probably getting slammed anyway. And so we're kind of facing this thing with a double barrel looking down at us. I mean, there's a potential for the roll to happen and to drop the prices on you, but you can't get it anywhere. So again, if you can find somewhere to get it as a grower right now, I would be on the camp of, I would lock this stuff in. And if you can't deliver it right now, there's places that will give you prices for later on to deliver it later. There's some places that if you had a contract, and I mean, some guys are still trying to deliver January stuff. Call your your local end users. See if you can get some of that stuff rolled out later on, so you're not facing any kind of penalty on delivery or anything. And they are willing to work with you. I mean, I'm seeing that across the industry. People are willing to work to make this work for you.
We kind of touched on ethanol just a little bit when we first started. I can't find my note, but so what's $120, $130 crude? What does that do to ethanol?
That's another. I was going to leave that as a one of my last ones, but that is the canary in the coal mine, in my opinion. If you see oil price continue to go up, you'll have supportive price for corn. The moment you start to see oil start to tiptoe down, it'll be a bad day for corn. Or, which politics aside, the Biden administration has not shown where they are willing to open up the pipeline here in the U.S., open up more rigs, allow drilling. Regardless of your opinion, that's kind of where we're at right now. And so we're starting to get into the talk. I mean, people are this is something that is just now starting to pop up in some of the articles you read, but food versus fuel. And you have to start to wonder if they will put out any RFS waivers. And, I mean, I don't see it happening. I mean, because that would go against what they've been pushing so hard right now. But if that should happen and they get waivers thrown out there and we don't blend as much, it'll be a bad day for corn.
Mm-hmm.
So with these markets up, again, we go back to like what we were talking about on the high entry to play the game. There's high risk, but there's also high reward here. And I would say that the oil would be a canary in the mine. Would be the canary to watch for, or the U.S. dollar.
Could go the other way though. Ethanol looks like a better play at $130 crude. Right?
Exactly. Oh yeah.
And I don't know. I don't think we have to be too careful about. It seems common sense. I'll just put it out there that we can complete a pipeline. I don't think. I don't know if any of our listeners would be in the camp of let's not complete a pipeline to go along with the other gazillion miles of pipeline that we have in the country.
Yeah.
Matter of fact, I think we have a speaker on another podcast that's going to be talking about pipelines. So
yeah, we're actually going to dwell on pipelines and domestic production.
Gotcha.
So.
Well, I'll be waiting to hear that one because I will be interested in that. I think that's. I'm not scared. Let me rephrase that.
So if you're from Washington County, you say that I ain't scared.
Yeah, right. And when you say Washington, there's an R in there. It's
yeah, that's right. Right, Washington. Yep, thank you.
No, I just that is going to be a watch out. The oil price and the U.S. dollar, because we're going to rely a lot. The way this thing is setting up with the Russia and Ukraine thing, this is setting up to be a very big export market for us. So the U.S. dollar is a big factor in that. If the U.S. dollar goes up in value, that means our exports are going to be more expensive for places to buy. If it goes down, it means it's cheaper. So that'll be something you definitely want to watch. A lot of people don't put or think about that too much. I mean, I think it's one of those things that we think about, but it's kind of in the back of our mind. It's not something that's usually up on the dashboard of our computers, and we got the little currency or the value of the U.S. dollar going up or down. I mean, we don't watch that. It's more of we look at it when the USDA report comes out. But in a nutshell, with South America crop being where it is and the Russia-Ukraine situation going on, this is setting up to be a big export market for us. So the U.S. dollar is going to be something to watch.
Good.
You asked me last time in the last podcast, about the ranges and about what's really trading in the market. I know Ryan and I had a conversation about a week ago going over just a grain industry for Jason and I at the Columbus elevator, looking at what our projections are going to be.
Because I've not been at all stressed about this lately.
Yeah. So the question was, what are we trading to make these values where they are? And I came up with a couple. And I kind of separated them into what is the market trading right now, and to go back to the watchouts, or what could it be trading in the future? So right now, it's definitely trading the Russia and Ukraine war. I mean, we saw it on Wednesday. We had a bullish report. Ending stocks went down for corn, and yet we dropped 20 cents. Not a big drop, but there was that little whisper of Zelensky willing to go to diplomatic talks, and we saw pressure on the market. We saw oil that day too drop. So again, it goes back to when we have diplomatic talks and this war kind of settling down, potentially you'll see pressure on the markets, because all of a sudden you're taking Russia and Ukraine, and there's the potential for them to come back online for all that supply of wheat and corn and sunflower oil. So when you have all that, the market starts to think, okay, I'm going to have my supply back that I'm used to. So definitely right now we're trading any kind of war headline at all. South America weather now for beans. We've been trading that. That's been something we've been trading for 2 months now. You could probably argue we've been trading it for 3 months or more now. The weather is going to be something that we need to watch for the future on their safrinha corn or their second crop corn, because that's the one that hits the export market. It doesn't stay domestically. Typically, I'm going to throw an asterisk out there, typically, because in this marketplace, there's nothing typical about it anymore. So we need to watch the weather for the second crop corn.
To clarify that, you've used that term several times. Is that just number 2 yellow corn?
Yeah.
It's just a second crop, but it's just regular number, maybe not even number 2. I don't know, but just regular yellow corn.
It's just regular yellow corn. Okay. The second crop is like us raising double crop beans. That's what it is.
Gotcha.
They go in, plant corn after they get the beans out, so they treat corn like a double crop. So that's something we need to watch. We're kind of trading it a little bit, but the big headlines are you'll see more action in the market, I would say, towards the end of this month when the planning report comes out. The Ag Forum outlook was, I'm trying to go off memory, I think 91 million acres of corn and 89 million acres of beans. It was either 89 or 88 million acres of beans. If we see a big variation from that, if all of a sudden they come out and say, well, according to our surveys, we're going to plant 94 million acres of corn, you're going to see pressure on this corn market. Now, it may be a knee jerk, and a couple days later, the market may shrug it off and be like, I don't believe you. But or if we see a corn acre number with an 8 in front of it in the 80s, we'll see this thing run up.
So there's 3 things. There's the war, obviously, the South America, and the planning report that's coming at us.
Yep, and those are on the near term things to be watching out for. Down the road, in a couple months, we need to be watching the South America weather for sure for their double crop corn. We need to be watching the U.S. weather as well. The world needs, if this war continues, and I'm going to say if it continues, and even if it doesn't, we don't know what shape the ports are in, and we don't know what the reception of the world is going to be of taking Russian supplies. There's a lot of what ifs in this scenario with the war. With the information we have right now, the world needs South America to have a big crop, and they need the U.S. to have a big crop as well. So if we have a weather issue, and right now the southern plain drought and northern plain drought are starting to converge, we're seeing drought on a pretty significant amount of our production out there. And I'm not saying we're going into, because we always talk about it. I mean, we hit a little bit of a dry patch in March, and we're like, oh, this feels like 12. And, in reality.
About drowned since then.
Yeah. And, in reality, we come out pretty well on the deal. We've been very fortunate the last several years. So it does feel like you're trying to play the odds of, man, we've not been bit yet. When is it going to come? So we need to be watching our U.S. weather. If we hit a dry spell or we hit a really wet spell, planting gets delayed, or we run way ahead of schedule, but the faucet turns off on us, this could be really interesting.
Yeah, which sign of the apocalypse? We've got plague, war, we got all the
famine,
good ones. Famine.
Yeah.
We got, why not have front row seats, right?
Yeah, exactly. Yeah. And that, we hinted at it. That's why this is I don't want to say scary. The world's in turmoil right now. There's no doubt about it. And at some point, we're going to have the debate of food versus fuel. I mean, and that's just where we're at. Now, if everything and everybody would play nicely and the world worked right, in our little minds that we have, Russia and Ukraine will play nicely, the ports will open back up, and everyone will go back to being able to trade as normal. But at this point, it just doesn't look that way.
I don't think there's much history of mankind playing nicely with each other, so
no,
we'll just take it as it comes.
So what you're saying is all we need is a little interjection of common sense within the ruling governments of about every country, and we're good. So, I mean, that's seems doable.
Yeah.
What could go wrong with that?
Seems doable.
Yeah.
So.
All right. Well, Ryan, do we have anything else?
I think that covers it just a lot. I mean, the last question I probably would ask would be, I saw a little blurb the other day that said the USDA report might have been throttled just a little bit on the news because of all the volatility already in the markets, that they didn't say exactly what they wanted to say. Any truth to that?
We've kind of bashed the USDA market or the USDA reports for a while now. I mean,
they've been an ezy target in our defense.
Oh my gosh, yeah,
Right, sure.
yeah. Yeah, and the last administration, I think it was Purdue, he actually went out and he actually said, okay, this is how these reports actually come out. They got to go through all these processes. So as far as I know, they've not changed the process. I think them putting that note out there signaled that they were going to be as conservative as they can to not inflame this market any more than it has to at the moment. Because in reality, we don't know much. I mean, Ukraine's not technically planning yet, but yeah, you have to imagine. I wouldn't want to be a fertilized delivery boy over there in Ukraine right now. I'd feel like I got a big giant target on my back.
So Ryan, just like marginal is a better word than goat pasture, inflame is a better word than freak out, right? So we can,
Yeah.
Yeah, we're doing a pretty good job mitigating our message here.
Yeah.
I didn't know how much there was to that, because it would seem like there could be other things they could say and take more things into consideration and really jack this up. And I don't mean that on their behalf, but I mean things could have gone even more awry than what they currently feel like they're doing.
Oh, absolutely. I mean, because the market feels like Ukraine's not going to plant anything. So you start knocking that, I think they had them at 43 million metric tons of corn production. You knock that off the line for global usage, that's a big deal. And I can tell you that the U.S. and South America can't make up for that. Not with our own needs and not with what we're doing right now. Something has to change. So, yeah, I think the USDA played it safe, and in my opinion, they needed to play it safe, because all they can do is take the numbers that they have right this second for the past month and look at what they have and the data that is available to them, and they can't project it on. They have to take what they have and drop that pin in the ground. They can't say, well, we think this is going to happen this way.
Yeah, you don't want a USDA report that's based purely on speculation.
Yeah.
Then you don't really need a USDA report. Our own minds can get the amount of crazy we need for that.
Yeah. Well, and you brought up the spec. I completely forgot about this.
You're welcome.
Yeah. Everyone hates the funds when they're short the market, driving prices down. I mean, everybody hates the funds. But all of a sudden, you start seeing prices run up, you don't talk about the funds. They're your best friend. So you got to take the good with the bad. If you didn't have, we live in a capitalism world here. If you didn't have people investing in this commodity market, you also wouldn't have prices going up. You just have it kind of stagnant. So again, we go back to high risk, high reward. And I think that's about where I'm at right now. I mean, it's a crazy world. Try to keep your head screwed on straight, because I will say that if some of this stuff shakes out and people start to, not people, but if supply starts to not become an issue like what we're thinking it is right now, this will be a bloodbath, and we will lose a lot really quickly. So again, it goes back to old crop. Be careful holding it. The market's not telling you to hold it. It wants it right now. If you can find an opening to deliver, take it. New crop, be on your toes. Because if this thing turns, it could be bad. If it doesn't, the glimmer of hope is, I'm not sure where the ceiling is on this. But what's the cost at those high prices too? I mean, that's kind of where we're at.
Well, I'll tell you what our plan is. We'll plant a good crop. We'll take care of it. Mm-hmm. Harvest it. Spike the football. Score a touchdown.
All right, Gronk.
Well, we could have saved 25 minutes if you'd have just told us that. I didn't know you knew. We'll quit having Aaron on. All right, sounds good. Well, those are your key points, and I think there's some value in continuing to have this. And I don't know, with the volatility, maybe we have you back in between USDA reports. We're kind of at that stage of the market, but we appreciate the time and effort you put into it. And they can always reach out to you at the Lagodi Grain Facility and Jason Newton at the Columbus Grain Facility. And we have those numbers available, and you're always welcome to call and get advice and think through this with some experts in the field. So appreciate it, Aaron. Thank you very much.
you,
and that's
guys.
another episode of The High Ground, powered by Premier Companies.